Good morning. Thank you for the opportunity given. Let me introduce myself. My name is Sonia Nanda as Author 1 and Dr. Siti Puryandani SA M.Si as Author 2. Let me present about our research. The title is The Influence of Cash Flow, Leverage and Profitability on Investment Decision in Financial Distress Companies. First, introduction. Market capital has a significant influence on an economy. There is a sale and purchase of securities between the issuer and the investor. Activities to invest in investing in company asset in a long time. Financial condition describe the company's performance. The company performance can be assessed through its financial report, good or bad. If bad, the company can experience financial distress. Financial distress is before the bankruptcy stage, shows a decline in the company's financial condition, starting with the inability to pay its obligation. Companies that make investment expect an increase in value and generate profit in the future. The factor for invest decision is cash flow, capital structure, liquidity, debt policy, and profitability. The phenomena from Minister of Finance Sri Mulyani Indrawati said that the industrial and agricultural sector are companies that are prone to bankruptcy due to the bad score on this index seen from the low scores on the Altman set score. The first research graph from cash flow. Cash flow has no effect on investment decision that from Priscilia Susanto and Bahri research. And cash flow affect investment decision from Zaki, Camelia, and Sudana research. Second, variable leverage. Leverage does not affect on investment decision from Zaki research, and leverage have effect on investment decision from Jumiati Herdianti research. 3. Profitability. Profitability has a positive on investment decision effect from Rahmiati Huda, Hendiana, Hartono, dan Wahyuni research. And profitability has a negative effect on investment decision from Wahyuni research. Then, formulation of the problem. First, is there an influence between cash flow on investment decision in financial distress companies? Second, is there an influence between leverage on investment decision in financial distress companies? And 3, is there an influence between between profitability on investment decision in financial distress companies? The literature review. First, theory. Assumptions. Companies prefer debt to fund companies. High firm value, same high debt. This is due to saving in debt costs so that investors have high net income. 2. The third of theory. Explain that there is a relationship between capital structure and firm value. There is an optimal level of leverage. Companies can consider the use of debt up to optimal point. Debt above the optimal point, same decreasing company value, same big loss, because there will be a greater conflict of interest between creditors and owner. As debt increases, debt benefit no longer cover this cost. Next, pecking order. The order is which funds are used in financing and investment or company operational activities. The order in which funds are used begin with funds that are considered cheap or internal fund. Manager will process the use of internal fund owned by the company, and if the source of this fund is insufficient, the company use the short external fund. Then, signaling, the assumption of unbalanced information between managers and investors. Managers are assumed to have better information about the state of the company that they manage. Investment decision is the decision to use company funds to make investment. The decision to use funds for investment is the same as capital expenditure. Capital expenditure is a major factor in investment decision, which are capital investment in fixed asset of the company. The greater the capital expenditure, the greater the investment in fixed asset by the company. Cash flow. The cash flow statement is a financial report that contains information about the company cash inflow and outflows. Cash inflows are obtained from transaction for main operating activity, extraordinary activity, side investment activity. Cash outflow are used for transaction using working capital, company investment. Leverage is the level of debt used to fund company asset. Companies that have a series of debt can add interest costs in their repayment payment. Profitability. All companies aim to get a large profit. This is measured by the company's profitability. Profitability is a tool to determine a company's ability to generate net profit or profit through the company resource. The hypothesis. First hypothesis is cash flow has a positive effect on investment decision for companies experiencing financial distress. Second, leverage has a negative effect on investment decision for companies experiencing financial distress. 3. Profitability has a positive effect on investment decision for companies experiencing financial distress. The explain for hypothesis. First hypothesis is the greater the cash flow the company has, the greater the potential for the company to invest. Second hypothesis is the amount of debt a company has can affect the risk of financial distress. The greater the leverage the company has, the potential for the company to make small investments in. Three hypothesis, the performance or productivity of asset is not optimal in obtaining a profit in the companies. The greater the profitability of the company, the greater the potential for the company to invest. 3. Research method. Population and sample. The population of this study is all 699 companies listed on the Indonesian Stock Exchange. The sample technique used was purposive sampling method, and the result is 256 company, and augmented score, the result is 75 companies. We use the equation of z-score like that slide. For result and discussion. Descriptive statistic analysis. Cash flow. The sample companies have low cash flow. For leverage, the sample companies have high leverage. Profitability. The sample companies have low profitability. Investment decision, the sample companies have low investment. Normality test. value seek, that result is 0.079 greater than the significance level of the normality test, namely 0.05. So that means the result data is normally distributed. Then multicollinearity test. So it can be concluded that the multicollinearity test result in this study having a tolerance value up on 0.1 and a VIF value under 10. This shows that there is no multicollinearity or no correlation. Heteroscedasticity test. So it can be concluded that there is no heteroscedasticity in the regression model because the scatter plot from a graph of random partner points that spread above and below the number 0 and the y-axis. Autocorrelation test. The autocorrelation test of this study was obtained from the Durbin-Watson value of 1.564. The result of the autocorrelation test is in a Durbin-Watson between -2 to +2. This means that in the study there was no autocorrelation. Multiple linear regression analysis. The constant Ki is 0.014 is positive or undiscretional. The CF variable coefficient is negative 0.040 and is negative. The variable coefficient is 0.004 and is positive. And last, the ROA variable coefficient is 0.548 and is positive. Model fit test. Based on the table, the calculation results show the significance value of this study is 0.004. The significant value is 0.004 under 0.05. The independent variable as a whole has an effect on the dependent variable. Coefficient of determination. This concludes that the influence of the independent variables in explaining variation in the dependent variable, namely investment decision that are KI is 18.6% and the rest is 91.4% explained by other variable. T-test. The result show cash flow value is 0.199 up 0.05. The leverage show 0.623 up or 0.05. Profitability is 0.000 under 0.05. 5. Hypothesis testing result. Cash flow and investment decision on financial distress companies. SIG 0.199 up 0.05. That means rejects hypothesis. Operating cash flow does not significantly affect the investment decision of company experience financial distress. The result of the study support the research of the Priscilla, Bahri, and that there is no effect of cash flow on investment decision. Leverage and investment decision on financial distress companies. 0.923 up 0.05. That means rejects second hypothesis. Leverage does not significantly affect the investment decision of companies experience financial distress. The result of this study supports STIE. Profitability and investment decision on financial distress companies. 0.000 under 0.05. That means accept third hypothesis. The result of the test implies that the size of the company's profitability has a significant effect on the investment decision of companies experiencing financial distress. Conclusion: the study, the aim is to determine the effect of cash flow, leverage, and profitability on investment decision in companies' financial distress, and the result of the study include cash flow does not have a significant effect on investment decision in companies experiencing financial distress. Second, leverage does not significantly influence investment decision in companies experiencing financial distress. Profitability has a significant positive effect on investment decision in companies experiencing financial distress. That the reference, and thank you for your attention our present. So goodbye.